JPMorgan shaking things up, telling its investment bankers to take it easy on the weekend, as long as there is no live deal in the works. Let's bring in the Wall Street Journal finance writer Emily Glazer, who broke this story. Is the culture really changing, Emily?
It might be.
Really?
It takes a lot for something to change at a, titanic mammoth firm like JPMorgan. It is the largest U.S. bank by assets. They have more than $2.4 trillion on their balance sheet from last year. And they have, roughly about 2,000 people that this could impact. So it's a small part of the firm, and it's going to take a while for things to really change.
Does this come back to attracting and retaining talent? I mean, we're seeing this come across the board. People want to go to Silicon Valley. It's cush out there. You don't have to wear suits, the hours are better. Is this what's speaking to that?
Yes, hoodies, they want it. It's Silicon Valley, it's hedge funds. They can make a ton more money at hedge funds these days. So why would you go to a Wall Street bank post-financial crisis? They don't have the same, reputation that they have today, and you don't make as much money, and the hours are still long, so they're working on retention.
But how convenient is the timing right now? Because deals have been sort of on the drop off. At least what I cover, IPOs, it's a very slow market right now. How long do you see this actually lasting until they quietly maybe roll it back a little bit?
It's a really interesting point because the 2015 deal market was crazy. You're right. This year it's slowed down a bunch. I sort of wonder if the other big banks will start going after JPMorgan and realizing, uh-oh, they did this. We need to do it now. For instance, Goldman Sachs did make some changes with their junior bankers just a couple months ago. So I wouldn't be surprised if maybe the opposite happens and all of a sudden we're seeing Morgan Stanley, Citigroup, Bank of America start making changes.
And these big banks really need the reputational repair as it is. I mean, if you look at the Republican and Democrat primaries, there's no love lost for any of the banks. There's no one rushing to defend them, really. So I think anything that they could do at this point to improve their image would be
suicides as well, and really serious matters over the last.
Yeah, but I think we got to go back to the point that talk is cheap, right? I mean, they're telling their bankers to do this, but if the bankers actually do it, it's like, why didn't you get this deal done? Why wasn't this pitch on the desk? I mean, I think this is the banks trying to appease, Main Street, saying, hey, we're friendly.
There's a built-in pressure, if you will, to work and work crazy hours, even if the bank tells you it's okay that you don't.
Right. I think the big thing to think about here is that if there's a live deal going on, no one's putting their phone under their pillow and putting it on silent. And frankly, I don't think anyone does that these days anyway, no matter what industry you are.
Yeah.
Exactly. But they're saying for things like presentations, getting markets data, no one should be at the bank at like 3 in the morning on a Friday night or over the weekend doing a presentation that might not be crucial. And I think that could be a shift from what for decades has existed on Wall Street.
But isn't it interesting that if we go back to the banks, they just reported earnings, and the investment banking divisions were the big profit centers for them. It wasn't actually trading or the fixed income currencies and commodities. It was actually investment banking driving the results.
Advisory at JPMorgan, which is M&A, IPOs, jumped 43% from the quarter a year earlier. That is insane, but that won't last. And just like you were talking about, it slowed down a lot this year, so we'll see what happens.
But the coolness factor for working for these firms is gone, is it not? And if you really want to make big coin, you start your own tech firm, you go work at a tech company, or you even go to a hedge fund.
Yeah, the reputation has changed a lot. There's no denying that. I think post-2008, post-crisis, it just isn't as cool to work at a bank. I don't think I'm the first person saying that. But
I'm petting Kevin.
But you don't have necessarily the ability to go start something, which is a very expensive proposition.
It gives you the cachet, the training, the reputation, the resume. It's not like it's a bad thing.
Emily, it was great to see you. Thank you so much for the coverage and for being here.
Thank
Emily
you.
Glazer, take care. And